Welcome back to NJBI is Minding Your Business. I'm Bob Considine. Well, it's a new year, there's a new president, and it's tax season. So you know what that means. Time to get caught up on the latest tax provisions for business and individuals. We recently spoke to Prager Metis partners Marnette Myers in Washington, D.C. and Harold Peterson in New York to get the latest tax tips for 2025. Here's what they had to say. Okay, Marnette and Hal, thank you so much for being here, and thank you for the great work you do at Prager Metis every day. Let's talk a little bit about the business tax provisions we can expect under President Trump's second term. I'll throw them out there. You guys can just comment on them. Research and development expensing. Could you guys talk about what's in store for that?
Well, currently, Bob, the research and development costs have to be capitalized and then amortized over a period of 5 years from the date those expenses were incurred. The feeling amongst many of the U.S. businesses who incur these expenses is that's something of a bar to investment and to development. So the proposal is that the research and development expenses would become eligible for immediate expense in the year that they were either paid or accrued.
Oh, that's interesting. So it'd be a shorter term thing. And so this is the current is over 5 years, correct?
That's correct.
And so would the 1 to 2 year, whatever deduction time frame, would that be as part of the next Tax Cut Act we would expect under President Trump?
Yeah, so it'd be 1 year. So you incurred in 2025. If this provision is passed, then you'll be allowed to deduct it in your 2025 tax year. The proposal is to include this, but the problem is what's going to happen. The tax legislation, Trump has indicated that he'd like one big package, if you will, an omnibus bill, which is going to include immigration, financial matters, as well as tax provisions. So that may slow down, the passage of these provisions, particularly for R&D. But if you have a big package such as that, a vast amount of committees have to get involved in Congress. And as you know, a committee is a place where a bill goes to die.
Yeah, I was just thinking as you were saying that, how that there's no such thing as a fast omnibus, right? It's the slowest moving vehicle there is.
Yeah, correct.
What about the qualified business deduction?
The qualified business deduction is currently allowed for certain pass-through entities such as S corporations and partnerships and limited liability corporations, which elect to file their returns as a partnership. That allows for a 20% deduction on an individual's return. This is qualified business deduction. That currently is set to sunset at the end of this year because when it was originally brought into the tax law by the Tax Cut and Jobs Act of 2017, it was slated to expire as of the end of 2025. The expectation is that under the Trump proposals, this qualified business deduction will be extended. And the idea was to give something of a parity to these unincorporated entities or pass-through entities. The corporate tax rate was reduced to 21% under the Tax Cut and Jobs Act. But on a pass-through entity, as you may know, the entity itself does not pay an income tax,
right,
to the federal government and in most states. However, that income passes through to the owners, and in some cases, the tax rate for the individual could be as high as 37%. So the idea of this qualified business deduction was to give something of a parity with these disregarded or pass-through entities and corporations.
So maybe how with that we could, and Marnette, obviously, we can pivot a little bit to proposals made during the 24 campaign by President-elect Trump, and he'll be president by the time this show airs just about. We're talking about a lower corporate tax rate for domestic production, right, under Trump?
Well, let's back up just a minute, Bob. The Trump proposal includes a provision to reduce the 21% corporate rate to 20% for most corporations. However, if you're a U.S. corporation that is producing domestically, manufactured products domestically, that corporation under this proposal would be entitled to the lowest rate, 15%.
Right. And if we go back even further, wasn't it at one point prior to his first presidency 37%, the tax
Uh,
cut, the
well,
corporate tax rate?
the tax rates on corporation before the Tax Cut and Jobs Act of 2017 ranged from 15% to 35%, correct?
35%. Okay. Yeah, this is here in New Jersey, that's a big deal because New Jersey has the highest corporate business tax rate in the nation. So I think there'll be a lot of New Jersey employers taking a look at that. And might those tax cuts offset some of the increases that could happen through increased tariffs? Is that too wild a speculation?
The tariffs are an unknown and a quantity right now. If there are
Mm-hmm.
tariffs, I think that um, that would cause somewhat of an offset to the gross domestic product
Mm-hmm.
that Trump is trying to encourage with these tax cuts, these tax provisions. So I think that that has to be factored in, and I'm certain that that will be a hot topic of discussion in the Ways and Means Committee when
Yeah.
a tax bill has to start in the House in the Ways and Means Committee. So the question of tariffs is going to be a particularly thorny one. I'm sure there's a number of permutations and combinations that have to be worked into what's done if those tariffs are indeed imposed.
Yeah, certainly here at NJBI, we get a lot of questions about what's going to happen with the tariffs even now.
Mhm.
Marnette, what about the repealing of green energy tax credits? What can you tell us about that?
That has been a proposal from Trump and his team on the election circuit that they were going to repeal a lot of the green energy credits and especially the EV automobile credits. Where that shakes out, I think, is going to be quite interesting given his, I don't know, relationship or the promotion of Elon Musk as a, government
Sure,
consultant
that's
of
a
some
fair
sort.
statement.
I mean, I think that right there, maybe the EVs won't change quite as much as what we were initially thinking. But yeah, throughout his entire time on the election circuit, basically EV credits have been, kind of in the crosshairs that was a lot of that was going to go away, not just for business, but for, energy efficient home improvements and things like that, which have just recently kind of come back into play. For a long time, there was a lifetime maximum of like $500 credit. And now in the last couple of years, that's gone away. And we once again have annual credits. So it will be interesting to see where that shakes out. But that's certainly been something that he's talked about regularly wanting to do in.
Right. Let's pivot, folks, with the individual tax provisions under possible under Trump in the second term. What are we looking for in terms of income tax rates?
So income tax rates, as we've kind of talked about, there's a lot that's changing as of 12/31/2025. If nothing else happens, the Tax Cuts and Jobs Act is going to uh, go away and sunset, which would mean that possibly as of January 1st, 26, our tax brackets could jump up to 10, 15, 25, 28, 33, 35, and 39.6. So a lot of numbers in there. But the big one, of course, is the jump in the highest tax bracket from 37 to 39.6. It has, Trump has basically said he wants to extend a lot of these tax cut job acts, of which this would be part of it. So I think overall, most people believe that these tax brackets that we currently have, where the top is 37%, will
Mhm.
probably be extended. Again, as Hal has mentioned, omnibus bill and things going through Congress, you never know.
Right.
But the general consensus is we think this will probably be extended. So 37% will be the highest tax bracket, and that will continue on.
Right. Okay, yeah, and for folks out there, the that highest tax bracket is for folks making over $609,000 for individuals and $731,000 for married individuals filing jointly. Big topic here in New Jersey. I'll throw it to you guys. The SALT, state and local tax deduction. What's going to happen with this?
So that's just a softball question you just lobbed up there for me.
Thank you.
Thanks. So yeah, so
Knock it out of the park.
totally easy answer. Yeah, this of course is, everyone knows is probably the most, hotly debated and contested portion
Right.
of the Tax Cuts and Jobs Act. And we've all been talking about it for many years. Currently, as of January 1st, 2026, the SALT limitation of $10,000 goes away if Congress does nothing.
Right.
So this is a harder one. I think, there's been some talk about potentially changing it from 10,000 to maybe 20,000.
Right.
A couple of Trump's advisors have kind of floated that idea. Trump has kind of, I don't want to say, flip-flop, but there's been some, hey, I want to extend all of Tax Cuts and Jobs Acts, but then SALT has kind of held back a little bit. So I think this is a really hard one. The other issue with the SALT tax is that a lot of states have instituted the pass-through entity tax credit regime
Absolutely.
to kind of work around these SALT limitations. So, what happens to those if SALT goes away? So this is a really, really tough one. I think this is, I don't even want to come down one way or the other because it's so hotly contested. I will say one of the, I guess, better things about SALT limitation is if that does go away and we can all deduct our real estate taxes and our state and
Right.
local taxes, and we'd all be happy to do that. One of the things just to kind of keep in mind is those deductions are a preference item for the alternative minimum tax. So along with a few other things, if we might get back into a regime where we're paying more in AMT than we were for the last few years because of this artificial SALT limitation. So it's, I like to tell people, while the SALT limitation is hard and we look at it, especially, the high tax rate, locations, there is a little bit of a positive in there. I don't want
Yeah.
to say it's a huge one, but it's a small one because, AMT is rough for, the way it kind of ends up hitting people that were never supposed to pay AMT. That wasn't how it was envisioned, and that's just kind of how it, ended up over the years. So I guess one positive thing about SALT limitation is it does kind of cut back on AMT a bit, but I give this one, this is like, a flip of the coin. This could go either way. It's a tough one.
You're right about that. I'll throw one more out for you guys. Child tax credit for the parents out there. Where do you foresee this going in Trump's second term?
So, right now, and one of the things that's been floated, actually, I think Vice President-elect Vance is the one who actually kind of brought this up first, was to increase that child tax credit to $5,000 instead of $2,000, which I think is actually an interesting proposal out there. I do think, right now the child tax credit is still $2,000, and it does phase out for those making higher incomes, which is, I think, $200,000 and $400,000 for married filing jointly. I think that's going to be extended. If it reverts back, we're looking at incomes of, I think, $75,000 for single, and like $110,000 or so for married filing jointly. And I mean, that's a super low number. So I really think that aspect of will easily probably be extended. And I think there's a decent chance that they expand the tax credit just to a higher threshold amount too.
Yeah, I thought I heard Vance say, Vice President-elect Vance say 5,000 even. He was even saying that. Well, this is really, it's going to be an interesting time. I know you guys are going to be very busy about it. If folks out there want to learn more, get more information, they want to go to pragermedicine.com, get one of their outstanding partners like the folks we have here today, Marnette Myers and Hal Peterson in New York. Thank you so much for being here.
Thank you, Bob. Pleasure to join you.
Thank you.
All right. Thanks to the folks at Prager Medicine, and thank you for joining us on NJBI is Minding Your Business. We'll see you next time.